Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video I said that gold would go up. There were a lot of bullish parameters and gold has gone up by almost $400. That's amazing. That's more than 10% from last month. So when you look at data, then you will know where the direction is. So what is the outlook for the coming month? Well, we are just going to look at our gold forecaster index. Okay, this index is based on leading indicators, so we can actually predict the gold price 2 months in advance. So what's the latest data point? And this is the gold forecast index, this whole formula, and you can see that we are heading higher. So for March we are at the top now, so you could compare this to this point. It's difficult to see with this chart, but this is from October 2020, and when you look at that point, then you see that gold has a lot of upside still left. If we zoom out to 2010, then you could look at this point, 2011. When it shoots up, then the green line, which is the gold price, will also go up a few months later. If it goes down, then the green line goes down a few months later. So we are still early. I think gold can still go higher based on this chart. Taylor roll rate, this is the rate that the Fed funds rate needs to be at to make sure that inflation doesn't appear, and the rate is going up. So that means that either the Fed needs to hike rates, or if they don't, then inflation will start to appear. So this is actually bullish for gold because the Taylor roll rate is headed upwards. You can see here in history, when the Taylor roll rate is above 0, here for example, then gold goes up. If it's negative during this period, then gold goes down. Here gold goes up, here also up, and here it was a period where it was almost negative, so this was a difficult period for gold, but we are now bouncing upwards, and I think gold will be going higher. So watch this space, it's bullish. Misery index, that is the unemployment rate plus inflation. I think inflation will be arriving soon with the tariffs, and unemployment rate will go up. We have seen a lot of data on that. There are not a lot of job openings, and unemployment, I think it will go to the 5% level. So this should start moving up. It has not done that yet, but yeah, it should go this way, and that would be bullish gold. Real output is deteriorating, so going up, which means deteriorating. That's good for inflation. Gold demand, yeah, this is moving higher. Central bank demand, okay, that's the blue area. GLD has also been rising, but lately it's a bit flat. LBMA gold was going down, but it's starting to rise again. Goldbank's gold was rising, but now starting to top out. But overall, it's headed upwards. That's good for gold. GLD, you can see here the head and shoulders pattern inverted. This can still go higher, and then gold will go up. Here you can see COMEX is starting to top out, Not sure what's going to happen here, but yeah, this was a tariff thing. Yeah? Now the tariffs are in place, so yeah, it's normal that it tops out a bit. But COMEX is only this tiny bit. Right? You have central bank demand, which is much larger. Next up, yeah, COMEX deliveries are still rising. LBMA, I don't have new numbers yet, but the latest on this is that it's starting to bottom out, the LBMA gold holdings. Silver is still dropping. China, I don't have new numbers yet for this month, but latest data is that it's flat demand. Demand is flattish. Even at this high gold price, you would expect that demand would go down, but it's flat. So good. On to silver, it's bottoming out as well. Especially COMEX silver is rising. And you can see here, this is a much bigger part of the flows. But here we don't have any central bank demand, of course, because this is silver. SLV, flattish. PSLV, we see some inflows. So there is some inflow into silver, but not a lot yet. Here we saw much more inflows when we had this boom in the silver price. Not a lot yet this time. Let's go over. Okay, so this is COMEX silver. It's rising. Central bank demand. Yeah, you can see we are still early. There's still upsides for gold to head to the 20% level. There's not a lot of allocation into gold miners either. So the best is still to come. China central bank purchases, yeah, still no data yet for this month, but you can see they are still buying gold. On this front, yeah, a lot of green, so that means that central banks are still buying gold. China reserve composition, yeah, this is interesting. You have a 3% allocation, and over 2 years' time, it now has become 5% allocation in gold for China. So they are selling treasuries 20%, and now it's 18%. So they're selling the treasuries and buying gold. That's a trend that will continue. US mint sales very low, so retail is not buying yet. Premiums very low, retail is not buying yet. You could say that this is not bullish, of course. When premiums are low, that's typically a top. You need high premiums, and that would be a bottom. But yeah, yeah, this is indeed not bullish. Same with junk silver. Low premiums are typically not that great. You want to have high premiums, which mark the bottom. Like this here, that's a bottom. This here is a bottom. This is not a bottom. Okay, so that's why I don't really like silver at this point. Shanghai gold premiums are excellent. So people think that this is a top, just like here, the top in 2020. But this and this point is completely different because here the Shanghai premium is negative. Okay, gold goes up and the premium goes negative, which means this is a top. And then the premium goes back to zero and then gold goes down. Here it's a completely different scenario because here gold goes up, but the premium goes up as well. You would expect this premium to go here negative if this is a top, and then go back to zero, and then fall back down. And some people think that it is going to fall back down to 2,500. but they have not looked at this chart. Okay, here we see 2% premiums. So that means we are in this scenario where the premium goes down and gold price goes up. Okay, same as here, it goes down and the gold price goes up. Same as here, premium goes down, gold price goes up. So if this goes back down, gold goes to 4,000. Why 4,000? Because at 3,400, you will see bigger moves because this is percentage-wise a, 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 yeah, a bigger scale, let's say, because this is, for example, here is $1,000 in gold. So you see much smaller moves, but percentage-wise, these percentage gains should be the same. So here it looks smaller, but here it should look much larger. So 4,000 is nothing. Okay, it's nothing on this scale. This goes down to 0. This goes to 4,000, and maybe even overshoot to 5,000. Okay. For silver, we have less bullish charts. With gold, it was going up the premium, but this is actually flat and actually negative if you take into account the VAT tax of 12% or 13%. So this is actually the zero bound, and we are negative. So I don't see silver outperforming gold at this point. So I would still prefer gold. The Upmex gold premiums are at 4%, looks better than silver, but still very low. You want to see 6% premiums, but yeah, it's historically pretty okay. Okay. COT reports, yeah, open interest is pretty low. So nobody is interested in gold at this time. Even the smart money longs are gone. So this is probably a good point to start accumulating because it's a bottom. Yeah, the smart money here, you can see they're getting out of gold. And there could be some corrections, of course. But when this correction ends, for example here, then that marks a bottom. So we are just in this scenario still, and gold could go down a bit. That's the trend, but at some point it will reverse, and that's the bottom. So I don't know where the bottom is, but looking at this trend, yeah, this open interest is in an uptrend. So I think this could be a bottom. If this starts moving back up, the open interest, then gold could shoot higher to 4,000. Okay. That's how you look at the COT report. Swiss franc doing great. That's good for gold. This should still move up together with gold. Real yields should still move up like this together with gold. And seasonality, yeah, May is not that great for gold. This is low season. So you need to wait until July to get back bullish. So there could be some seasonality drops in gold. But anyway, gold is at all-time highs, so this looks pretty bullish. Sentiment, I think sentiment was neutral. Let's see. Okay, so the sentiment is quite bearish. This means that we are at the bottom. Okay, so when we are here at the bottom, that means that gold is at the bottom and going up. This is a top. Now we're back almost at the bottom. So yeah, that looks very bullish. This could be marking a bottom in gold and gold miners. Currency in circulation, actually starting to rise again. So the blue line is rising again. That's good. Currency in circulation is starting to rise again. And you can see here, this is gold has a long way to go to get back to this blue line. Stocks overvalued should come down a bit to the blue line, which is currency in circulation. This is a pretty interesting chart, the 30-year bond yield divided by the 10-year, and it's rising. So typically when this rises, that's an inversion of the yield curve. If this goes back to the top, for example, that would mean gold would go much higher. Okay, up, down, and then gold up, down, and up again. This is the second derivative, and it correlates pretty well with the change in gold price. Well, this is a very nice correlation. The green line and the blue line. If the blue line is above 0, then gold will go up. Yeah, this is the change year over year of the gold price. Okay, if it's positive, then gold will go up. How to buy gold? Yeah, there were a lot of people searching for gold and how to buy it. Debt to GDP, we don't have an increase in debt yet, but soon they will need to increase the debt ceiling. That will be bullish for gold. Okay, you can see the correlation, perfectly correlated here. Debt to GDP. Debt to GDP is about to go up again, and then gold will go up as well. Okay, near-term forward spread. This tells us the possibility of a rate cut. So here you can see we will have rate cuts, and typically when they cut rates, that's when we have a recession. So this data point tells me that we are going from negative back into positive, which means gold will go much higher. I think 4,000, 5,000 is very much possible. When you look at here, for example, yeah, I can see much 300 to 400. That's 30%. When you go from here to here, that's from 1,000 to 2,000. That's a double. So this is a double in gold. This is from 1,300 to 2,000. Let's say 50%. And this one is from maybe 200 to 800. That's a 4x. So I would think that this move would give at least 50% upside, and that would give us 5,000. Okay, 5,000 gold at the top, which is very good for gold miners. They will make lots of money at 5,000 gold. We are still in a rate cut cycle, so gold will go up and stocks will go down. Yeah, this is the path of the Fed funds rate. This is the 2-year yield, and you can see it's starting to move lower. So more probability of a rate cut. Foreign gold deposits are still rising. Yeah, that's good for gold. That means that there's demand for gold from these central banks. Lease rates were back to normal here, borrowing fees back to normal, so nothing to see here. Gold futures curve is improving. So this was, for example, the May gold futures curve, and then the June one is lower. There was a drop in gold, but look at this. At the end, it's still the same. So in 2030, the price for this gold future is still at 3,900. So this is bullish. Even though gold dropped, long term, we're still going up. So you need to look for these subtle differences to assess the gold price. Silver, yeah, it's also going to go up together with gold. VIX improving, so that means gold will outperform the stock market. Monetary Metals says that the current fair value gold price is 3,500, so that's higher than 3,300. Okay, so we are going higher. DXY is rolling over still. I think a drop of 10% is possible in the DXY, which correlates with around 50% upside in gold. So 5,000 gold is possible, at least 4,000. And we are currently at 3,400, somewhere here. So that means we're on target to get to 4,000 by the end of this year and 5,000 by the end of next year. Okay. Gold miners are going to make a lot of money. So there are gold miners right now with 10 times leverage to the gold price. Okay. So if gold goes up 10%, then these gold miners go up 100%. Okay, so if this goes from here, 3,000 to 3,300, that's 10%. Okay, then your gold miner is going to double just from this 10%. If you actually go from here to here, that's almost a double. So 100% times 10 means your gold miner goes up 1,000%. That's a 10x upside. If gold goes to here, then your gold miner is going to 10x. Okay? Just think about that. You can 10x your money. And that's all that I'm going to say about that. Okay, so money supply is rising. That's good for gold. Central bank balance sheets. Let's see. What I look for here is that it goes up, and that means that they are printing money, and that's good for gold. It's a bit slow today. Okay. Interesting. So we have the blue line, which is the ECB. Blue line is going up. That's interesting. Yeah, that's probably because the euro has gone up. Yep, the euro has gone up. So in dollar terms, the ECB is printing money, just in dollar terms. And the Federal Reserve is still doing QT. It's going down. But soon this will revert and they will do QE again. So here you can see they are reducing the QE, doing, yeah, this is the QT, but they're doing less QT of it. And then at some point they will print money again. Let's see if we still have money in the bank. Looking at the Treasury General Account, so it's gone up because of the tax receipts. And we're waiting for this to come back to zero, and then probably then they will increase the debt ceiling. Yeah, but we're not there yet. did I do a reset? Yeah, it's still, there's still money in the treasury, but that should come down at some point. Next chart, the deficit. Okay, what kind of chart is this? All right, so the trade deficit has indeed gone up. It's plunging. Yeah, this doesn't look good for the US. Goods deficit is ballooning. It was at, I think it was minus 140 billion in total. And even services are now going to go down. So both services and goods are dropping. Not good, but there's light at the end of the tunnel. This is moving up. So maybe when the tariffs are done, then the deficit will come down a bit. This is all front running of the tariffs. So we will see in April if it improves. Still a deficit between imports and exports. This is the deficit. Prices are rising, so there's inflation. Imports and exports rising. Okay, this means that there's still growth, but this is Q1. Let's see what Q2 will bring. Yeah, this is the dollar and this is the deficit. Normally, when the deficit goes like this, the dollar should come down. So I still expect the dollar to plunge and gold will go up. On to capacity utilization. Capacity utilization, latest data points down a bit, but it's pretty flat. I still think inflation should rise. You can see that here. Yeah, the Michigan inflation expectation is pointing up. That's this one. And yeah, PPI also went positive. This is the 10-year break-even rate, is also moving up. Okay, so I think this is bullish gold. Good. Let's look at some blog posts. IEA oil demand. Yeah, this tells me that demand will be lower than the supply. So there's a surplus in oil coming for this year and the next year. So I expect oil to be pretty weak. So I'm avoiding this sector. Goldman Sachs says that we will have 40 oil. Here's the evidence. Yeah, they say 55 is the normal price for the coming years, but in a scenario where we have a slowdown and full unwind of OPEC cuts, then you could see 40 oil. So even 55 oil, I don't like that. It's not a good price to be in oil producers. So I'm avoiding that sector. This was an interesting one. We are still in May. Container ships coming to a stop. Trucks coming to a stop. Trucking demand comes to a halt. And we will see, with a delay, we will see layoffs and a recession coming in summer. So we are still early. The crash in the stock market will still come in summer. So take into account that there is a delay on this. Stagflation, good for gold. Gold miner ETF flows. Yeah, you can see that people are getting out of gold miners, negative, even though that the gold miners are going up in price. So this is not a blow off top. This is actually the start of a bull market. This still needs to go in the plus, and I think gold mines are going to go much higher. Supply chain collapse. Yeah, the truckers are saying that container volumes have collapsed. So we are going to see the effects of this tariff war in the summer. So I'm prepared for that. I'm in gold and not in oil. And this is a nice artwork where you can see that gold is going up and oil is going down. This is the Tasmanian tiger. What a beauty. And I expect gold to keep on rising and oil keep on dropping. Then on to the BBK index. This is the Brave Butter Skelly index. A warning sign. The red line is going negative. So if this continues to go negative like this, then you need to watch out. Okay, then the stock market is probably going to roll over. There could be a delay of maybe 6 months. Yeah, sometimes this goes up and then this still goes up for a while. But once we are going negative, then with a delay, the stock market will start to crash. So the recession will come at some point. I don't know when, but it's coming, and then yeah, stocks will crater and gold will go up during a recession. Gold vs other currencies, yeah, that's the chart where you can see that they're moving into gold. Okay, so that was it for this month. My conclusion is that gold will still go higher from here. Looking at the data, we don't look at technicals. People would say, a technical analyst would say, oh, this is touching the upper bound of this ceiling, so it should come down. It should correct to 2,500. I'm not looking at it this way. I'm looking at the data, the fundamentals. And the fundamentals tell me that gold will go to 4,000, 5,000 in a hurry. So let's see next month if I'm right again, but gold will go much higher. Okay, and I'll see you in the next video.